Welcome to the Deep Dive. Today, we're looking at life insurance, but maybe in a way you haven't really thought about before.
We're moving beyond just the idea of it being for family protection after you're gone.
Exactly. We're going to explore how some people, particularly the wealthy, are apparently using it as, well, a wealth-building tool. It's pretty interesting stuff.
hmm Our goal here is to unpack cash value life insurance. You might also hear it called the infinite banking concept.
Right. And we're using a source that lays out how this can actually work as a way to grow wealth.
It's definitely a shift from the usual thinking.
For sure. I mean, most of us probably view life insurance as just an expense, right? A safety net for the family if the worst happens. That's the standard view.
That's the traditional model, absolutely, an expense for a death benefit. But what we're focusing on here are specific types, like whole life or indexed universal life policies.
Okay, so not term life insurance. These are different.
Different? Yeah. They're designed to be permanent, and crucially, they build up cash value over time. Think of it sort of like a savings account built inside the policy.
And it grows tax deferred.
That's right. Tax deferred, often with compounding interest. So there's this cash component building up while you're still alive.
Okay, so more than just the death benefit, there's this living benefit too, this cash value. And here's where it gets really different according to the source material.
Exactly. As that cash value grows, you get the ability to borrow against it. And the key thing here is you can do it tax-free.
Borrow against it, tax-free. So it's like having your own line of credit.
Basically, yeah. The personal line of credit you control. And people use these funds for, well, all sorts of things, investments, opportunities.
But wait, the source also mentions something fascinating, that the cash value keeps growing even while you're borrowing against it. How does that work?
That's the core of it.
Bro.
Because you're borrowing against the policy's value from the insurance company, you're not actually withdrawing from your cash value.
Ah, I see. So the principal amount you've built up is still sitting there.
Precisely. It stays invested and continues to earn interest or dividends, depending on the policy type. The insurance company is essentially still crediting growth to your total cash value.
While you have a loan out that you're paying interest on, presumably back to the insurer.
Correct. You pay interest on a loan, but your underlying asset, the cash value, keeps compounding.
Okay, so that explains how the wealthy might use this. The source talks about people putting in like 6 figures a year.
Yeah, significant amounts. They use these policies as a ready source of capital.
So for example,
Well, they might use the loan to fund, say, a real estate deal. Then, when the deal generates profit, they repay the loan back into their policy.
so they become their own source of financing, effectively cutting out traditional banks for that deal.
That's the idea. Consistent access to capital, tax-free growth on the underlying value. It's a different way to manage capital flow.
Which, makes you wonder, why isn't this more commonly known? If it's so advantageous, why haven't most of us heard about it?
Well, the source we look at suggests the financial system is generally set up for you to borrow from institutions, like banks.
Not to become your own bank, essentially.
Right. This strategy kind of flips that relationship. It puts more control and the banking function back in the individual's hands.
It's a really different perspective on money management, but there has to be a catch, right? The source mentions some caveats.
Oh, absolutely. Very important point. This isn't some magic bullet. It's not for everyone. There are definitely rules,
Yeah.
potential risks.
Like what?
Well, you need serious financial discipline to manage the loans and repayments. And these policies themselves, whole life policies, they have fees and complexities. You really need to understand the structure.
So it requires commitment and understanding. It's not just set it and forget it.
Not at all. It's an active strategy.
Okay. So what we're really talking about is encouraging a shift in perspective. Maybe thinking about certain types of life insurance not just as death protection.
But also as a potential tool for building wealth and accessing capital during your lifetime.
Yeah, a tool you can use while you're living.
Exactly. So the core insight really is that cash value life insurance, if you set it up and manage it strategically, can function as this kind of wealth-building engine. Tax-free growth, borrowing capability, those are the key features.
Right. So maybe a final thought to leave folks with. In a world that heavily promotes traditional banking and borrowing, how might understanding alternative strategies like this, becoming your own source of capital, how might that change your approach to long-term financial planning?
It's definitely something worth thinking about. A different path, potentially.
Food for thought. Well, thanks for taking this deep dive with us today.